Hi, everybody. It's Laura plus Christy Real Estate, and I'm Christy Leggett.
And I'm Laura Prescue. We are licensed realtors with Royal LePage Kelowna. We wanted to talk to you today about these unprecedented times. We're getting lots of questions from our clients, and we wanted to provide you with some knowledge so that you can make informed decisions for you and your family moving forward.
So we've had quite a bit of time lately to jump on some calls with our clients, which has been awesome. We've loved it. We've had a lot of good phone calls and chats, but there just seems to be a lot of questions that come up. So Laura and I just kind of started thinking that our clients can't be the only ones with all these questions. So we've kind of formulated and taken the most asked questions and kind of made our top 5 question list that we're going to ask different professionals in our community. And we're just going to call our series Be Well Advised. So without further ado, our first interview is with Melissa Wood. She is a mortgage specialist with RBC. She's been there for 15 years, and 11 of them have been with mortgage lending. She specializes with first-time home buyers, investment properties, as well as lending for people that are self-employed. And she works at all branches, so she's easily accessible.
Thanks for having me, girls.
I think one of the most questions that we're getting right now about financing, it's kind of a two-part question. Are buyers still able to get mortgages? That's number one. And if they were already approved before kind of mid-March, are these approvals still good?
Yes, clients are still able to get mortgages. I think people that are less affected by COVID-19 and are still working and don't have any income disruption aren't really being impacted. The banks are doing some extra due diligence and asking questions just to make sure that, their income isn't going to be disrupted in the future, because we don't want to put clients in a position that they can't afford the property as well. And then there are some of those clients that, aren't working and have been laid off, are on the CERB. There actually still are options for them too. So there are some scenarios where we're getting a little bit creative and we can actually use some of that CERB income if that helps them get qualified, or if they are in an industry where it's strong and they're likely going to be going back to work soon, then we can actually use some of that pre-COVID income too. So yeah, definitely clients can still get qualified. So I think, if you have an existing pre-approval in place, you haven't purchased yet, you don't have an offer in on a property yet, you should talk to your mortgage lender and your professional because your situation has changed. But at RBC, if you do have a firm approval, so what that means is, let's say you've put an offer in on a property, you've removed your conditions, now you don't have a job. If you had a firm approval from RBC, we are behind you. We're still going to give you your financing. So that's a really good news story.
That's good to know. And so what about timelines? So a lot of these contracts we're writing are 2 weeks for due diligence. Is that still a good timeline for getting approval on financing?
Yeah, you know what? Honestly, I think things right now, some things seem to take longer, but our credit department still has most of their staff working. So we're still getting, as long as we can gather information and appraisers and et cetera have availability, then yeah, we're still able to get deals done within that time frame.
Okay.
Oh, that's great. Also rates, everybody's talking about rates, and oh my gosh, rates are so low, and take advantage of that. I don't know if this is case specific, but can you comment, are you recommending a variable rate right now? Are you more leaning towards the fixed rate? Kind of what's your advice on that?
Rates have been a crazy roller coaster ride over the last couple months. They plummeted, when COVID-19 first kind of became a thing here in Canada. So I've seen rates go down like a ton, like within a couple of days, they dropped like 0.5%. And variable's been down because the government's trying to still make sure the economy is moving and people are still purchasing. So yeah, variable's good. But I kind of take an approach with clients that if you're a gambler, yeah, variable might be the right thing for you if you're okay with that fluctuation. But you know, a variable is a 5-year term. So if you don't think that you can handle your interest rates going up, possibly your payment going up, if you're with another lender, RBC, your payment doesn't go up, but that is a possibility out there. Then variable probably isn't the best for you. If you're going to be, you know, freaking out in 6 months once rates are going up, probably not the way to go. But no, with variable, you can lock in at any time at RBC. I don't know about other lenders, but at RBC you can. So that's kind of a little bit more reassuring. Personally, I'm a conservative person. I usually take fixed. Fixed rates are still below 3% in the grand scheme of things. You know, there's still some really good fixed rates out there too. So honestly, I think it kind of depends on the person.
Just whether you can handle the risk or not.
Exactly. So I'm always having that like in-depth conversation with people, but rates are low. Yeah, it's a good time to be renewing or purchasing.
That's good.
Another interesting kind of topic that's, I guess, kind of a bummer of a topic for a lot of people if it's happening to you, is foreclosures. So is RBC forecasting them to increase? Are we going to see more distressed sales? I know a lot of buyers that are looking right now that are like our investment buyers are thinking, are we going to scoop up something?
Yeah, you know what? I'm probably on 2 or 3 conference calls a day right now, with lots of different people at the bank. Our head managers haven't really brought up foreclosures, so I don't think that that's like something that's on their radar yet. However, my brain thinking, you know, with people that are losing their jobs, and when things go back to our new normal, as they're saying, you know, a lot of these businesses might not be surviving. So who knows if they're going to be able to afford their payments. I really hope that people don't lose their properties in all of this, but I think it could be a possibility. But no, RBC is not like forecasting it yet.
Okay. Well, yeah, I think it's just something, I mean, I presume it's just a very fluid situation. And if somebody is opportunistic that way, just get in touch, get pre-approved. Maybe they will be able to find an opportunity. But like you said, come from a place of hoping that everybody is able to keep their housing in place.
Yeah. And you know what? It's a couple years ago when the government came out with the stress test, they were qualifying clients now at, you know, a higher payment than they would have. So let's hope that they can afford these mortgages, because the banking industry was projecting that maybe clients might not be able to. So that's why they have to qualify at that higher rate. So hopefully that will help too, that maybe people actually have more flexible income than they would have before, because they were qualified out of that stress test.
Right. Okay. What about, I was actually listening to CBC today, and they were doing a talk about deferred mortgages and that sort of thing. There's a lot of, I wouldn't call it rumors, but just maybe some misinformation circulating. Can you clear that up for us, please? If you were to defer your mortgage, people are saying, you know, the interest rates are compounding at the end of it, or what are they saying? Tell us the goods.
Yeah, so at the beginning when this came out, that you could defer your mortgage for up to 6 months payment, a lot of people thought that it was just a mortgage break, and that we were basically giving them a break and not charging them any interest. Definitely not the case. No. I've suggested from the beginning when clients have contacted me that, you know, if you can make those mortgage payments, make them. The deferral is there if you have an issue with paying your mortgage due to COVID-19, but you still want to be paying your mortgage. Yes, that interest is compounding. So basically what happens is, you know, let's say your interest payment per month was $500. So now that $500 in interest that you didn't pay down gets added to your mortgage balance. And then you're paying interest upon interest. So not only is your mortgage not paying down as it should be, the balance is actually going up because it's adding on that interest that you haven't paid, and then you're paying interest on that interest. So that's how compounding interest works. I'm glad that it's there. Lots of people need this, but if you don't have to pay, like, you should pay your mortgage. Don't defer if you don't have to.
Right. No, I think that's really good advice. And I think at first people were thinking, woo, but you got to read the fine print. And that's always kind of our recommendation. But of course, our number one recommendation is just get in touch with your mortgage professional and make sure that they explain to you the ramifications of that decision.
Yeah, I think the media has blown it out of proportion a little bit. Like we're not making a bunch of money off this, but you are paying a little bit extra to do it.
Yeah.
Yeah.
So it's interesting this week, there's been a lot of different, there's been webinars all over the place and Zoom calls everywhere. We sat in on the Urban Development Institute's last webinar, and they were just talking about development in our community. And I guess this is a little bit crystal ball type stuff, but there was talk of, you know, a surge in real estate in Q3 and Q4. Does RBC have any thoughts on that? Has there been any kind of water cooler talk about what's going to happen in Q3, Q4?
We're hearing the same thing. So I've been on a few different conference calls about that too. So they are projecting that the fall is going to be like our spring this year, because our spring is kind of halted and a lot of people aren't purchasing because they're either worried that they won't be able to make their payments or maybe they don't think that they can. So yeah, they're projecting that the fall is going to be a surge in real estate as well. I'm hoping that the financing is going to be, you know, normal, just business as usual by that time. Every day lately, there's something new coming out about what we either can do or what we can't do. So things are evolving quickly and quite a bit. But I'm hoping by the fall that, yeah, real estate should be booming again and we'll be doing business as usual is what my hopes are.
Yeah, and that's we share that sentiment. Christy and I are both really calling this a little bit of a stall. We're hoping that specifically Q4, there's a real resurgence in the ability of people just to move around a bit more. Of course, being socially responsible, we want to make sure that we're not doing anything that puts the public or our clients in jeopardy. But we are thinking that the fall is going to be our spring. So we're rallying for that. But yeah, I think this was very helpful. I think you cleared up a lot of questions. Are there any questions that you're getting right now, Bailey, that you would love just to communicate to the public? Or
I think, I'm sorry, I just totally jumped in there. Like one thing I'm thinking, Melissa, is like, how have you actually had to pivot your business? Yeah. So, because I would assume like during a day, you probably do a lot of face-to-face meetings, but that must be different now. So how have you pivoted and innovated your business?
Oh yeah, everything's totally different. I actually prefer to do things face-to-face because I feel like I can help clients a little bit easier when you get in front of them and you can help them. But we've had to change the way that we do things. So I'm doing a lot of conference calls with clients, setting up a lot of telephone meetings, things over email. I'm actually still doing quite a few pre-approvals. So people are still reaching out and wanting to get pre-qualified. I think some people are using this time as an opportunity that maybe they can get some good deals right now on property because of that. So yeah,
we got you. You lost
my phone just told me I had 10% left.
I can still hear you though.
Okay, good. So yeah, things are definitely different. I'm working at a home office with a 3-year-old. Times are challenging, but you know what? I've also taken it as a time to learn new technology. Like RBC's come out with some new e-signing technology, which has been super cool. Clients have loved it. So much easier. So there are some good things that have come out of this.
Yeah, I think not everything is a negative, right? And I think that at the end of the day, we have to find a silver lining in everything. It's unfortunate that we have to try and find it in this, but it is what it is.
Yeah, totally. So Melissa, if somebody wanted to get in touch with you and chat with you about mortgage rates or pre-approvals, where can they find you?
I can give you my information right now, like my phone number, my email address. What would you like? I'd say that they should just get in touch with you guys first because they're probably going to be your clients or your prospective clients if they're following your feeds. And then we can all work on them together. I'm available by text, email, phone, whichever is easiest for everybody.
Okay. Well, that sounds good. Well, Melissa, we really appreciate you taking the time with us today. We love working with you. It's always
awesome. I love working with you guys too, and also feel really valued that I can hopefully help some people and answer some of their questions. But just know we're just a phone call away. We're still working. Some of the branches might have limited hours or being closed, but we're all still here to help you.
Great.
That's wonderful.
Well, thanks so much. We appreciate your perspective, your expertise, and I guess that's it for us too. So I guess Laura and I are going to sign off, and until next time, be well advised.
Yes.
Thanks.